Thank you very much, Ife, and hi everyone. Great to be here. I hope that you got enough out of Shubumi's session. Always very educative when she delivers some of these sessions. So I'm not going to speak to some of the things that she's already touched on, but I will try as much as possible to just delve into the core of the reason why we're having this webinar today. First, I wanted to, before I share my screen, just maybe put a question out to you, to everyone, that if you had $100,000 that you're not using, emphasis on that you're not using, what will you be doing with it now? And just, there are no right or wrong answers. You can just put it in the chat box. Let's just see what you have. If you have $100,000 that you're not using, what will you be doing with it right now? Just feel free to go ahead. I see Eurobond. Okay. I guess by Eurobond you mean investing in Eurobond. You would invest, and it's okay if you say you're going to travel the world or you're just going to blow it. It's also fine. Real estate, startup, I see. Invest in various funds, mutual funds, venture capital, real estate. I see a lot of real estate investments. Okay. Buy African art, acquire music royalties, supporting African creators. Amazing. Okay, that's interesting. In the bank, because I do not know what to do with it. I like your honesty, Rosemary. I do like your honesty. Sarah, I like your honesty to put it in the bank. Angola bond. Be careful, Ibunge. Led to organizations, farming and stressing investment, look out for mix. Okay. Interesting that nobody is talking about just, buying a car. So I guess we have a number of people here who are very investment focused. You're not really in the consumer market, you're in the investment market. Very interesting. Okay, thank you. I see real estate, forex, travel, find an avenue for my family's equity. Excellent. Okay, invest in art. I like that as well. Fantastic. I think that we have a mix of different things here, and they're very useful. Let me try and make a statement that I would try as much as possible to live up to by the end of this, and it is that everything I'm about to say today has the potential to change your life. Has the potential to change your life, incredibly unlock prosperity for you. And the reason I know is because it changed my life and it unlocked incredible prosperity for me. I say that with every sense of responsibility because it's not, I don't throw words out there without maybe having the things to back it up. And so I need you to please pay particular attention to some of the things that I will say. Shubumi shared extensively around research and work that we had done in one of our companies, which is Volition Cap. And again, we did another research with Opportunic, and that landed us on an investment model that literally, investment model and philosophy that literally got me jumping at the time that I finally was able to, I guess, maybe put a word or put a phrase around all of the things that we've been doing, and in a sense, even all of the things that maybe I spent the last decade plus in my life also doing. And so that's what I want to spend time just talking to you about. But I was at different times just really just highlighting some key examples. And some of these examples are linked to the panel session we're going to have just immediately after this with our guest today. And because all of the things we're talking about sort of dovetail into our main case study and the fund that we're launching. Because my session is Unlocking African Prosperity with Alternative Investment. And the reason this is important is because we're at a point right now on the continent of Africa where traditional investments cannot get us any further than it's already gotten us. And I'll give reasons why it can't. But before then, A bit about me. This is something that I hear every single time. You don't really, unless you go online to Google you or go on LinkedIn, you don't talk much about yourself. I think I wrote a piece recently about founders' behavior and stuff, and I got quite a number of people responding and saying, "Oh, I didn't know that you did X, Y, Z. You were involved in this." So I thought, okay, let me start by just sharing a bit about some of my footprints in terms of business and investments. All of the brands or logos that you see on the screen here represent maybe just about 20% of all the different companies that I've been involved in at one point or another. Either directly founded some of them, co-founded some, invested in some, or literally, helped some start from scratch, like from ground zero. And the reason I felt that this was important to show you is that all of these different entities, by the way, Black Book is not here. It should be here. Editing will find me that it's not here. So Black Book should also be here. And the reason why I put all of this here is because they represent everything I'm talking about as far as alternative investment is concerned. You could classify this under three main categories: venture investment, private equity, and to a certain degree, in terms as far as this is concerned, also hedge fund. Because in the mix of these bags of different investments that I've done in some of these companies, or that are founded or led or co-founded, it's a mixture of all of the things that I've mentioned, and they represent the idea of non-traditional investment journey. And some of this work have been covered by different media platforms and all over the years in terms of my work. But I guess today, it's important that we take a look at sort of like the middle class, in Africa. Number one is that, there is a total investable wealth of about $2.4 trillion that we have on the continent at the moment. And I'm not even speaking to the diaspora yet, because I see a number of familiar names on this webinar. These are some of you, I know you live on the continent. So in your pockets, in your bank accounts, in your savings account, when we aggregate all of the capital that is available for investment, it comes to about $2.4 trillion. And this number will reach about $3 trillion by the end of 2030. So therefore, the African middle class is not just a consumer market, but it's actually a very significant economic, dynamo. And we have incredible investment potential. And this investment potential has the ability to lead to powerful wealth creation opportunity. And what is driving this really across the continent is really and I would say it's actually more driven by our young population. Average age across the continent is about 21.5 years rather. In Nigeria, about 19.5 years. And so this sort of like youth energy is driving entrepreneurial ability across the entire continent. And then of course we then get into when we then have the ability to recognize and address the challenges of this middle class with what will become really what lead to lead to unlocking African prosperity. Over the years, there's one main challenge that we've always had on the continent around wealth creation. People talk about the idea of wealth creation as being extremely difficult. Wealth creation as being, a challenge. In fact, I always say that, I see governments talk about poverty alleviation. And my own thesis is that if you look at the number of years and times we spent on alleviating poverty, but poverty is as real as ever, actually more so now than it was 30, 40 years ago. Something should tell us that maybe poverty is not something that you fight. So maybe we should stop fighting poverty and start creating wealth. Maybe if we change our economic policies from poverty alleviation to wealth creation, perhaps the mindset will change. Because sometimes when you're really afraid of death, then you don't live. But when you're really trying to live, death moves away from you. So if we move away from like the negativity, which is fighting poverty, alleviating poverty, to now sort of like wealth creation, how we then approach our policies and all of that will be different. And of course, as fund managers, how we approach investment creation opportunities will then be different. Over the years, there's really one thing that financial institutions have used on the continent to create some opportunities. Number one is really around traditional financial instruments. And by traditional financial instruments, you basically have, your equities, your government bonds, T-bills that many of you know about and all. And then the second challenge is that there are distinct hurdles, social economic limitations, institutional limitations. Shomi spoke a lot about financial literacy and the lack of investment opportunities because we don't band together. We don't invest together. Oh, by the way, somebody asked a question around, can we really invest together if we don't like each other? We have to become a team of rivals in order to invest together. We don't need to like each other. One of the best teams in the world that played about 10 years ago under Alex Ferguson, Man United. There were two players that never liked each other, actually, maybe about 15 years ago, Dwight York and Andy Cole. And they became the best striking force in the Premier League. They didn't need to like each other. They just need to know that it was mutually beneficial for them to be striking partners and share goals. If you don't pass ball to me, I'm not going to score. Then next time, I'm also not going to pass you. So they had to come to a point where we don't like each other. We don't go for dinner together. But when we get on the training pitch, we train together, we play together, and we leave the pitch, and we're fine. But we rank the scoreboard of the top scorers in English Premier League. Abraham Lincoln in the US led an entire nation by building what he called a team of rivals who came together to lead the whole nation. So really, I can invest. It's not everybody that you saw the cap table of the Black Book. I don't think, maybe I've only ever met 3 or 4 people on that cap table, but we're all like executive producers. I don't think everybody on the list possibly likes me or I like everybody. I'm not really asking everybody whether I like them or not. Is that, are we doing this investment or not? Edith brought everybody together, and we are looking to exit and do well. I'm fine. We like the color of the dollar, not necessarily the color of the faces or each other. So really, that's the way to really think about banding together and investing together. So these two challenges are challenges that need to be solved in order to get to a place of unlocking prosperity. Now, there's a paradigm shift that we need to have, and it centers around 4 main areas. Number one, and the reason we have this, we need this paradigm shift is so that we can really get to a point where we truly unlock prosperity for Africa. And this was what our research, as we're writing the paper or the report on the Unlocking for African Prosperity Report, we started to find that there are 4 things that we must do. Number one is that we must diversify. This is, of course, speaking to the middle class, economy across Africa, diversification. That's government side. But for us as middle class or people in the middle class space, must begin to think of diversification of investment. Very, very important. We're currently too concentrated. When I saw some of the list of what people were saying and responding to, I saw a lot of real estate, which is good. I mean, there's a current real estate product in Nigeria, New Lagos, that I believe would be a great opportunity for people. So it's fine. But we must not always think a particular asset class, or must think absolutely wide in terms of our option. The second thing is that remittances are a source of wealth creation for the continent. In 2022 alone, about $100 billion got remitted by African diasporans to the continent. I used to be part of this community. I lived in England for many years, and I sent money home. But at the time, the value in 2005, 2006 was really in total about $26 billion sent across the diaspora. Now it's risen to about 100 billion. Nigeria alone accounts for 25 billion of that of the remittance value. But you know the sad part of it? Less than 5%, our research found out, less than 5% of this remittance value is going towards investment, meaning that majority of it goes towards consumption, and the rest, literally the rest is just put towards investment. So we cannot unlock prosperity with that kind of mindset when we're really consuming what we're sending, what the diaspora is sending back. And then, of course, opportunity creation for the diaspora, so for the middle class, is extremely important. creating the kind of fund that we created, the first one, that gave opportunity to about 20 plus people to come in and join us in funding a major project that we didn't even know what was going to happen. It was an opportunity. And I find that many times people send me messages and said, oh, how come we didn't know about this? These opportunities are always there, but most people always just remember that somebody mentioned to them after the fact. So, you were told about a startup 3 years ago, but you didn't really think about it, or you didn't say anything, or you didn't read the email, or you read it, you didn't think it was going to be great. And then 3 years down the line, you hear that it's now worth $250 million. Oh, why didn't you tell me about it? So the opportunities are always there. And today I will share a few more with us. And then, of course, there is a place for fund managers like us. So I'm licensed in 2 jurisdictions as well, in terms of managing fund effectively for institutions. And so our strategy is not just for the middle class, because I actually believe that one of the major unlocking keys that we need is for private capital to be channeled towards public good. And private capital doesn't have to be private people's capital. It could be private entities' capital that are not listed on the stock exchange. They are not on the Nigerian stock exchange, Joburg stock exchange, Egyptian stock exchange, but they are private capital and they are deployed for public good. I believe that institutional capital, in the hands of fund managers like us, have the ability to return alpha to the people that they are managing it for. Look at the pension funds across Africa. Nigeria's pension fund hit $17 trillion, trillion naira. I mean, one of the fastest growth ever since the reform that was done about 10 years ago, 17 trillion. But guess what? It has not, only a fraction of it is invested outside of government instruments that is able to return anything above 10 to 12% in naira. So they're not even beating inflation rate, they're not beating devaluation rate. So it means that some people's pension will not even be available by the time they are 65, 70 and retired, because they have not generated enough return on that investment. So it's time for pension funds to open up for many of you who represent institutional capital, family offices, to begin to think of alternative investment. And so our theory of change and investment philosophy at Opportunic is then changing and moving towards unlocking prosperity for African investors by leveraging alternative investments. We've literally built the rails for alternative investment. For those that follow us, for instance, on LinkedIn and or online across our different platforms, you'll see today that we released our performance report for the quarter, and I'll share a few of that with you, and you'll see some of the things that alternative investment is doing. Now, this pivoting from traditional investment to alternative investment, this is what it gives us. It means that we're able to leverage opportunities in REITs, not just real estate, brick and mortar real estate, but real estate trust funds, in hedge funds that have the ability to really, by the way, hedge funds, if you look at the West, particularly the US market, hedge fund has created more wealth for the wealthy outside of regular investment than any other investment instrument anywhere in the world. So hedge funds are very important. And then of course you have private equity, you have digital assets, you have venture capital, which many people hear about when the companies that they should have invested in is now going either IPO or is now being bought by another company for a large sum. And then you have private debt instruments, invoice financing, structured products. Digital asset is actually quite important. Let me drop a statement here, something that might shock many of you. The ETF, the value of Ethereum as a crypto asset, Ethereum, which is the second largest crypto asset after Bitcoin, the value today is worth more than the entire West Africa's capital market put together, the entire stock exchange in West Africa put together. That should tell us something. So alternative asset is attracting serious capital unlike never before. The space of movie creative industry, what the next few years will look like will be incredible powerful as far as capital attraction is concerned. So alternative investment essentially is a wide range of opportunities beyond stocks, bonds, and real estate. And I believe that what the mobile phone did for Africa, what it did for Nigeria, what it did for Ghana, for Kenya, where you have M-Pesa, that helped us to leapfrog, the challenges that we've had with fixed landline that we could not use, that we could not deploy. That's what alternative investment will help us do. The same way we use the mobile phone to leapfrog the rest of the world and build faster payment infrastructure, we would also use alternative investment to do this, because we cannot catch up with the US. Let me give you an example. The largest companies on our stock market, for instance, I keep using, so let me use Nigeria. The largest companies in our stock market, Dangote Cement, all the banks put together, their entire valuation of this entire company is about $60 billion. The entire of the big stocks in Nigeria. That's not up to the value of a mid-cap company in the US market. And I mean mid-cap. So it means that put all of our stocks together in the Nigerian Stock Exchange, they cannot even get on S&P 500 in America. Now, how do you want to compete and begin to use the traditional investment strategy that they have, which is working, and be able to generate alpha? So it means that we have to pivot to something different. So let me run through this fairly quickly. So we did this survey, and this is primary data, by the way. We collected data across Kenya, Nigeria, South Africa, Zambia, and Zimbabwe. Guess what we found out? The purple at the bottom indicates that many of you have actually been doing alternative investments. You just didn't know that you were doing alternative investments. So some of you that are talking about buying art, I want to buy, I invest in the venture. The question I asked at the beginning, you've been doing it over the years. You just never knew that you were doing alternative investment. But let me now welcome you to a new dispensation. Welcome to the world of alternative investment. So you can now congratulate yourself, at least say to yourself that I am an alternative investor. So you've been doing it, but you've just been doing it unconsciously. But we now need to double it down. We need to take it above the 10% or the 20% mark to now begin to do 80%, 70% of our investments in alternatives. That's what it means. And the benefits, as I begin to wrap this up, is that number one is that you're guaranteed higher returns. You will sometimes invest in your local currency. You exit in USD. By the time you're changing it back, it's possibly even the value of justify you're converting it is increased by 20-30%. Not even the return on the investment. So higher returns are possible. Our trading desk, for instance, in the last month alone, 0.1% turn in a month. Now, if they continue to do that month on month, multiply by 24, it gives you about 12. It gives you about 25% return in a year from a trading desk, not the entire fund. So that gives you an idea of how much you can get, and that's 24% in USD. Of course, diversification. You hedge against currency fluctuations, and then it's flexible. In terms of what you can invest in, doesn't box you to one thing alone, and it's decentralized. So I dare say that to unlock African prosperity, my thesis, my philosophy, my focus, and literally what I'm evangelizing around is that I wish all of you all will become alternative investors, where you begin to exit some of the assets that are traditional and begin to think that, okay, Keo, what should I put this into that in 2 years, in 3 years can really unlock incredible prosperity for me. Our impact in unlocking unlocking prosperity through alternative investment is here, highly celebrated, and the main reason we're gathering to have a conversation today around it is the Black Book. At the time that this was being structured, it was being structured as a project finance investment. But here we are, is a classic example of alternative investment where people had invested 3 years ago in Naira, when the value of Naira to dollar was about 480 to the dollar. Now I'm not happy saying it, It's unfortunate, but they are exiting and it's above 1,000 naira when they are getting their returns out. And now we have an opportunity to now do a large number of this. I mean, we'll speak to that shortly during the Q&A session. And so as I begin to just wrap up, this is a classic example of what an alternative investment can do for you. All the guys that you see at the bottom, the iShares, MCIs, emerging market funds, those are traditional funds, Vanguard, and these are in the US, MSIC. I mean, these are the China one, obviously, is emerging market. That's our trading desk alone. That's opportunity trading desk. In July, and this is just the second half of the year, in July we did 2.65%. Only three of these beat us in that month. In August, as many of you know, the market had been terrible, have been volatile, and it will be for the rest of the year. We did 0.3%. We didn't lose. Every single fund here that were benchmarked against lost. In September, 2.1%. Look at the losses under that, 2.8%, then 3.2%, this one 4.8%, and other benchmark lost higher than that. And so what we do is that we apply a very steady set of risk management strategies in trading, and we trade wide different asset classes that are largely alternative assets, FX, fixed income, some fixed income products and all. So a short story as I wrap this up, someone reached out to me, I think first quarter of the year, and said, I have, a $5,000 amount that I'm not using. With her permission, I'm sharing this. I said, okay, what can I do with it? I said, well, our fund is launching soon. Why don't you put it in this? I've had this in my bank account for like 3 years. And you left $5,000 in your bank account for 3 years not doing anything. Anyway, cut the long story short, she invested in Opportunic, $5,000 in June. Between June and now, it's up by 3.57%. That's an example of what unlocking prosperity could be. If that is $500,000, it will rise by the same value, and you can literally see your return on investment rising month on month as we begin to report back to you the growth between June to July, the growth between July and September, and now for those new people that are coming in October to December, you can also see the growth. And so get started today with Opportunic. It's very easy, opportunic.com. Learn about it and create an account to even just get in and find out how you can begin to just really unlock prosperity for yourself, leveraging an alternative investment strategy. And of course, if you want to reach out to me, here is the best way to get me is on LinkedIn. Once you scan this code, it would give you my LinkedIn page for those who are not connected to me. And if you already are, send me a DM. My team will pick it up from there. It's faster than email these days. So that's it, everyone. Thank you very much. I'm looking forward to the panel conversation. And for some of you who are looking to also design personal wealth sessions, I'm happy to sit with you to see what you have for institutional investors, fund managers that are looking to design something for your large funds. Happy to engage you one-on-one. Thank you very much.